Imagine you have $1,000 to invest. Would you rather spend hours choosing individual companies or put your money into one investment that can give you exposure to many companies at once? That's one of the main attractions of exchange-traded funds, or ETFs. Think of an ETF like a party mix. Instead of buying just one item, you get a mixture of different investments in one package. This can make diversification much easier. And for Australian investors, one important question is, how much of your portfolio should be invested in Australia and how much should be invested internationally? One popular approach is combining VAS and VGS. VAS provides exposure to Australian shares. This gives investors exposure to a broad range of Australian companies and potentially Australian dividends and franking credits, depending on their circumstances. VGS adds international exposure. And this is important because Australia represents only a small portion of the global share market. For example, imagine Sarah has $10,000 to invest. Instead of investing everything into Australian companies, she could choose to divide her investment between Australian and international shares. The exact percentage is a personal decision. The key idea is Australia plus international exposure can provide broader diversification. But what if you want ethical investments? You could investigate ETFs such as VETH and VESG. These funds use specific environmental, social, and governance screening criteria when selecting investments. So the concept remains similar. Australian exposure plus international exposure, but with ethical screening. Now, what if you don't want to manage multiple ETFs yourself? That's where all-in-one diversified ETFs come in. For example, VDHG and DZZF package multiple investments into a single diversified fund. This can make portfolio management simpler because you're not manually buying several different asset classes yourself. But remember, simple doesn't mean risk-free. What the fund invests in. It's fees, strategy, and risks before investing. Now let's talk about making investing easier. One challenge isn't knowing what to invest in. It's actually sticking to the plan. Platforms such as Perla offer automation features that can help investors make regular investments and manage portfolio allocations. For example, instead of waiting for the perfect time to invest, an investor could set up a regular investing routine that suits their financial situation. But don't forget about costs. Before choosing a broker or platform, check brokerage fees, ETF management costs, and any other applicable fees. If you're making frequent smaller investments, brokerage can become especially important. You should also understand CHESS sponsorship and how your investments are held. Some Australian brokers use CHESS-sponsored structures, while others use different custody arrangements. Understand who legally holds your investments and how the structure works before opening an account. So, which approach is right for you? There isn't one portfolio that is perfect for everyone. You might prefer the classic combination of VAS and VGS for Australian and international share exposure. You might prefer VETH and VESG if ethical screening is important to you. Or you might prefer an all-in-one diversified ETF such as VDHG or DZZF because you want something simpler to manage. The most important thing is not finding the most complicated strategy. It's understanding what you're investing in, understand the diversification, understand the fees, understand the risks, understand how your investments are held, and most importantly, choose an approach you can realistically stick with over the long term. Which approach would you choose? Let me know in the comments. And if you found this useful, like the video and subscribe for more simple Australian investing content.